Alright, welcome to another video on how to secure yourself financially. So in this video, I'm going to jump straight forward to the last statement or at the third financial statement, which is the cash flow, and make a quick recap of that. It reports the inflow and outflow of cash over a period of time. It is important because the company needs to have cash on hand, to pay its expense or purchase assets, and they reuse some of the information from the balance sheet, income statements, and the bottom line of this statement shows the net increase and decrease of cash. So generally, this is made of three parts. So the cash flow statement is review the cash flow from one of these three activities: operating, investing, and financing. So once I look at the operating, and how it does, what it does first, and then how it works. Well, first, what it does is to look at the net income from the income statement and then analyze and conciliate with the total amount of cash that was used or perceived from other operating activities. So the most common operating activities, we have operating assets and liabilities, right? So where the most common operating assets are accounts receivable, property, plant, and equipment, inventory, prepay expense, so expense that a company incur for goods and service that will be provided, such as premium insurance, like medical, like health for medical coverage, home or vehicles, so you can protect those belongings in the case of any potential accident, life in the event of the policyholder's death, liabilities to protect you, for example, in case like lawsuits, disability to prevent you from working, as well as long-term care, such as nurse home care or home health care, rent, marketing, office supplies, software license, and maintenance contracts are another example of prepay expense. And keep looking at other operating assets like intangible assets such as patents, which is exclusive rights to inventors of original works so they can manufacture, distribute, and sell their invention over a period of time. At least I'm going to mention a couple of patents that changed the world, such as maglev, this electromagnetic system for stability, electromagnetic inductive system for stabilization and suspension for ground vehicles, GPS, this navigation system using passive ranging techniques, issued in 1973. maglev was issued in 1969. CRISP gene editing, which is a gene editing tool, issued in 2014. And the electronic device, such as your mobile, issued in 2007. Well, I also look at trademark, which are image, designs, video, and audio that uniquely identify this company from the competition, such as the famous quote from Michael Buffer, "Let's get ready to rumble." Copyrights, which are exclusive rights to creator of original work, such as Spotify, Twitter, Netflix, trade secrets, confidential data that company use to gain competitive advantage over the process, formulas, and over the process, formula, and customer lists. Goodwill, which is the brand recognitions, reputations, and the brand recognitions, the reputations, and customer loyalty. So keep looking at other operating assets like intent or investment in affiliates, such as joint ventures, a partnership between two or more companies to undertake a specific business activity or project, such as one example of this is Crocs and Post Malone, right? It's very interesting that equity investment company may purchase significant amount of stake on the another company's stocks, raising its voice and potentially influence in the another company management decision, such as Berkshire Hathaway, which is an investing holding company led by Warren Buffett that invests in a variety of sectors, whether it's energy or retail, real estate. SoftBank is another, but in this case, Japanese conglomerate that invests primarily in technology companies such as Uber, Airbnb, Alphabet, which is the parent company of Google, that invests primarily in technology companies through its venture capital arm called Google Ventures. And for example, they have Calico, this longevity company, this technology longevity company. TPG, Tech Pacific Group, where now this is a private equity that invests in different sectors, whether it is healthcare, real estate, limited partnership, which is another intangible assets. I mean, investment in affiliates. Okay, where now a company purchase a stake on the limited partners in return of assets in return of the partnership assets in operations. This is somewhat very careful that you should go, a very careful arena. Also, we have associate, which is where a company or investor that owns 20 to 50% of the company stocks. So with that, I also look at cash and cash equivalent, which is another form of investment, loan operating assets. Okay, where now this you have things like money market funds, which is the whole point of this to get liquidity fast. And this fund invests primarily in very short-term debt instruments, such as bank acceptance, very short debt issue by banks, saving or certificates or certificate of deposit, which is a saving certificate with a short-term maturity, commercial papers, risky and unsecure commercial or debt issued by corporates or corporations, and repo, this repurchase agreement, where now this is short-term debt issued by governments. This is TLDR of this money market fund and cash equivalent. So with that, okay, then I look at the most common operating liabilities, where we have is accounts payable, money that you owe to your suppliers and vendors, usually between 30 to 60 days, for things like raw materials, service, office supplies, accrue expense, service that the company has received but not yet paid for. Okay, so good and service that a company has received but not yet paid for. And you have here like wage and salaries, rent, utility bill, taxes, deferred revenue, which are obligations that a company have to pay for good and service that need to provide in the future based on money that has been collected, such as subscription service, Netflix, Spotify, gift cards, that kind of thing. And also the income tax payable, money that you owe now to the governments for based on your income and the tax rates. So a couple examples you have is the corporate taxes, where here in South America is very painful, very, very painful to do that. Yeah, you have corporate taxes. In the case of US, the corporate taxes is something around 21%, where here in South America is something like 35, 31% is substantial. Sales tax, such as by state or county, city. Also, you have VAT, the value add tax, which is a tax imposed on the production of goods and service. At every stage of the production of the good and service, where the customer ultimately pay the full VAT, and business along the supply chain remit that tax, that portion to the tax. Excise sales or excise tax for things like for certain goods like tobacco, alcohol, gun, gasolines, as well as something called GST, good and service taxes, which is a tax imposed over the VAT. Canada, India, and Australia do that. So, okay, good, because with that, then I look at because with that, then I look at Jesus. Corporate sale taxes and withholding taxes. Something that is very, very important, especially if you were in a dependent relationship, or whether it's a dependent relationship or a contract. Okay, so this withholding taxes is especially on the dependent relationship, employer and employees, where the employee remit or deduct from the gross employee salary a portion of that, and it remit to the government. So this is, according to Investopedia, is to promote the pay as you earn tax system and the to fight tax evasion, right? Then I also look at the short-term borrowings, which especially for a company that needs to meet their financial needs or cash flow needs. Well, they ask and they promise that they're going to repay these loans within a year or less. So you have here like bank loans, okay, to line of credits, okay, when the bank offer is how much money they can borrow. So how much money company can borrow money, so line of credit, okay, as well as trade credits, For example, when a company wants to renegotiate their, or want to renegotiate its vendors and vendors or suppliers, a company wants to renegotiate is or reschedule the payment from their suppliers and vendors, right? Outstanding invoice. So a company may show the invoice and the lender evaluate that, and based on that he borrow money to the company. And payroll advance. So now company can give cash advance to their employers that will be deducted in the next payday. Great, because with that, all right. Then I also look at the notes payable, where now the subtle difference between the short-term borrowing and the notes payable, okay, is that here the borrower now make an agreement to the lender specifying all the terms and conditions of that loan. So this is not constrained by time. Okay, this is a promise, or it create this notes payable based on these terms and conditions outlined in a loan. So you have is banks. So anytime the company asks a loan, it generates this notes payable, where indicate is the principal, aka the original amount borrowed by the banks, plus interest and the repayment schedule among other details. You have banks, you also have companies, where here instead of going to banks, they go through any of these financial institutions, whether are private firms or venture capital, and they create this agreement to outline well the details about that loan and when this company must repay that. Also, I look at the bonds, all right? So whether it's issued by bank, whether it's issued by a government or a company, it generate this notes payable for that. I just want to look at the other example of notes payable. Okay, whether it's banks, it's companies, bonds. This is common investing activities. Okay. What? That's right. Where is it? Where is operating activities that we got? Okay, so this notes payable, right? It creates a promissory note. In Spanish, this is a pagaré. A promissory note. In Spanish, this is a pagaré. All right, so it create this promissory note for that. So we create these bank loans, so business loans, bonds, promissory notes, where now individual or business may issue promissory notes directly to lenders when borrowing money. Okay, so promissory notes. So individuals or business may issue promissory notes directly to lenders when borrowing money. And these notes outline the terms of the loan, including the repayment schedule and interest, making them notes payable. But this is more for, according to ChatGPT, so this is more for individuals or business, right? This is more for individual or business that issue these promissory notes directly to lenders when borrowing money. Okay. The other are trades payable, where now this is a renegotiation or you may negotiate an extended period of payment terms with your suppliers. Okay, trade payables. An installment loan, so when individual or business borrow money for purchase assets like vehicle or equipment, they may enter into installment loans agreement. How do you say that in Spanish? Okay, installment loans. Installment loans, préstamos a plazos. Installment loans, okay. Installment loans in Spanish. Yeah, but all of these are based on this. Préstamos a plazo, préstamos por cuota. Can I pay off the loan early without any penalties? Installment loans. Préstamo por cuotas. Alright, okay. Cool. Okay. No, please. But those are examples, right, of the short-term borrowing. Notes payable. Okay, those are examples of loans payable. Great, because once I look at that, and also at the warranty obligations, which is obligations that a company has to fix or replace a particular product that is defective or that doesn't meet the certain quality standards, like, for example, manufacturing warranty, parts, service, vehicle, home. So once I look at that, right, understand what are at least the most common operating activities, which is, after all, that's one of the things that the first part of the cash flow statement conciliate with the net income from the income statement. Okay, so you conciliate this net income for the total amount of cash that was used for any of these operating activities, operating assets and operating liabilities. So with that, okay, so the way how it works is, well, look at the net income and adjust for any non-cash items. Okay, so items that affect the income statement where there is no cash involved. That's what they call non. Yeah, that's one of the reasons why they call non-cash items. Okay, such as stocks, compensation, amortization, or depreciation, and also by looking at the total amount of cash that was used or perceived by other operating activities. Okay, and when it comes to the second part of the cash flow, which is the investing activities, Generally, it involves is the purchase of long-term assets, such as investment in affiliate uh, or intangible assets, property, plant, and equipment. I don't know why it doesn't load this. Long-term asset example here. I'm looking here at the long-term assets. Broadly speaking, okay, so long-term assets such as that, so property, plant, and equipment, intangible assets, okay, intangible assets, investment, goodwill, interest, yeah, totally. So long-term assets are goodwill. Again, this is looking by the review the cash flow from this investing activities. Okay, so goodwill, leaseholds improvement. So improvement made to a lease property, such as renovations, alteration, or additions, to better suit the company needs. Deferred charge. Again, this is just broadly speaking, the most common long-term assets, right? These most common long-term assets. Okay, yeah, so long-term assets. Okay, so long-term assets typically can be property, plant, and equipment, intangible assets. The property, plant, and equipment, intangible assets, goodwill, leisures or leasehold improvement, investment. Okay. And when you look at the most common example of financing activity, because after all, the cash flow here is being reviewed the cash flow here is being reviewed by how do you put it? How do you put it? Yes. So here is being reviewed, okay, the exactly, it's being reviewed. All right. Jesus. The financing activities, okay, review the cash flow. This second part of the statement, review the cash flow from one of these financing activity. That can be is issue equity. Okay, so financing activities are transactions that involve the company long-term liabilities in equity. And this is a great definition. Let me look at the definition here of the financing activities from Investopedia. Okay. Cash flow from financial activities. Financing. Type of finance and financial service, the basic of financing a business. What are operating activities? What are operating activities? The function of a business directly related to providing its good and service to the market. Okay. Operating revenue and operating expense. Okay. So the other is the basic of financing a business. What is debt financing? But this is debt financing. It's different because this one is based on debt. No, financing. What it means? What it matters? Financing. Financing is the process of providing funds for business activity, making purchase or investing. But yeah, it's providing funds. Financial institutions such as banks are in the business of providing capital to business, consumers, and investors to help them achieve their goal. What is this? The use of financial is vital in any economic system, and it allows companies to purchase product out of their immediate reach. Put differently, financing is a way to leverage the time value of money to put future expected money flow to use for projects started today. Okay. It's a way to leverage the time value of money to put future expected money or future expected time, effort, flows to use for projects started today, because they talk about money. Financing law also takes advantage of the fact that some individuals in the economy will have a surplus of money that they wish to put to work to generate returns, while others demand money to undertake investment. Also, with the hope of generating returns, creating a market for money. But in any case, financing is a process of funding business. So they talk about its funding, especially in the context of this, right? But here, financing activity, ChatGPT mentioned that it is a transaction that involves the company long-term liabilities and equity. It involves company long-term obligations and piece of ownership. Interesting, right? Because once you analyze that, okay, that financing activity according to this large language model, so financing activities are transactions that involve financing activities are transactions that involve the company long-term liabilities and equity. Meaning, so there are transactions that involve, okay, and when we talk about transactions, okay, is the exchange of these obligations, these long-term obligations, and equity. This piece of ownership, okay, is the trade, is the exchange of long-term obligations with ownership. So how do you have ownership? Let me okay. So let me, based on how much I have, I'm going to trade that with you in terms of having something. But in other words, this is something interesting here. Okay. Oh, to put it simple, is financial activities are transactions that involve. So financial activity is a transaction, it's a trade, it's the exchange. Okay. So financial activities are exchange of the companies or the individuals long-term liabilities or long-term obligations and piece of ownership. This is what it means, financial activity, according to this large language model, right? So financial activities are the exchange of yourself, okay, of the exchange of the companies, is the exchange of these long-term obligations and piece of ownership. Okay. All right. So this is financial activity, to get something in return. Okay. So I giving this part of ownership in return of some obligations. Okay. And I am exchanging. It's pretty fucked up, because this is part of the corporate world, corporate America. So I'm exchanging is I am exchanging is ownership, whether that thing, whatever is that thing. Okay, so I'm exchanging is ownership, whether it's my time, my resource, in exchange of an obligations in an exchange, in a long-term obligation. Okay. All right. So that'll be all for this video. Take care. Bye bye.